and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, check it out, linked in the description below. It's the first place we go to notify you of everything that's going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in Discord. Let's jump right down into this video. So here we have Bitcoin paired up with USDT on spot, 1 hour, and BitGet is our data source. As you know, we're trying to make that pivot more away from the Binance charts over to the BitGet charts. Obviously, BitGet does not have as much data yet as things like Binance, but it's my go-to exchange for trading and stuff. So I'm trying to do the charting on there as well. Let's take a look. Right, so this is our smart money concepts. Okay, this tracks basically large money coming in and out of the market. So let's start here and then we'll move over into Elliott wave theory. So on the 1 hour chart here, you can see that we basically have this overlapping structure. Okay, we're kind of bouncing around a lot up and down over here. This is very indicative of a corrective market. Okay, so for example, we can see that we have higher highs and higher lows down here. It's not a guarantee, but typically these things do end with a break to the downside, not a break to the upside. It's not always 100%, but for the most part, higher highs, higher lows break down, and lower highs and lower lows break up. Okay, so you can see here that we've been this overlapping structure, and basically we'll be looking for a breakdown from this range by the looks of it. So this is very corrective. Now you can see here that we've been nesting down 5-wave structures from an Elliott wave theory point of view for quite some time, and so this is an interesting corrective structure, but we'll talk more about that in a moment. So from a smart money concepts point of view, we can see that we are basically up in these internal sell order blocks just at the top here. Okay, they've been kind of hitting and keeping and suppressing the price of BTC. You can see that we got rejected from equilibrium, and we're right down here in this buying range as well, these buying internal blocks. So that actually means that we're more likely to just see more volatility within this range for now. But today is a bit of a key day. So we got the FOMC meeting, the Fed rate decision. This is basically going to allow us to see whether the Fed are going to basically pause, which was spoken about a little while back, or whether they go for a 0.25 rate increase. Now, I think considering everything that is going on, the thing that should occur would be the 0.25. However, we cannot rule out the idea that they will pause and potentially cause more damage further down the line. But you know, it's something that they can potentially do. So all eyes are on the Fed when it comes to what interest rate they're going to go for today, because a 0.25 I think will be bad for the market. We'll see this potentially come on down. However, if they go ahead and pause, we might see a brief rally. Okay, so I think all eyes are going to be on whatever that fundamental rate is going to be. Now, at the moment, it could go either way. There isn't actually a lot of information within this little area here, in this ranging market, to say that it has to go up. It has no choice but to go up, right? It could actually go either way. And we're actually in a reasonable position for the market to actually rally quite a bit. So if we were to see a 0.25 and the market were to collapse down, then I don't think it's going to be a big move to the downside before we actually end up having to have that relief rally. Just basically liquidate the long positions, then take the price up north. And if we were to see a pause, then we might be able to test these highs that we were at around $27,000. And it'll be interesting to kind of see how that plays out. Now, the smart money concepts, you can see there's not really large funds messing around. So the last ones that we saw here in terms of like big movements were here, and this fair value gap was filled. We had over here, you can see this big move down on this side. Again, it got filled. And at the moment, there isn't really anything that's not really being filled. I mean, there's one tiny one just over here. Let me show you where that sits right now. And then it's only within the last hour, so may even get filled out before we this video even goes live, right? And you can kind of see it right there. This one being sat between 25,881 and 25,966. And so for the most part, not terribly too much. But the fair value gaps, when they do come, are quite interesting in themselves, right? Fair value gaps basically are an imbalance in order books, okay? So what we mean by that is that when you have an order book that is imbalance, you create these gaps because price can't be filled within that range. So for example, and take this little gap here, a large sell order came in, but it was illiquid and the price couldn't, or there wasn't enough buyers up at the higher range. Price has to come down to the low range to fill out those sell orders. And so when we take a look at the order book, we can see all the sell orders and all the buy orders, right? And when that imbalance occurs, as in there's too much selling pressure and not enough buying pressure, you get those fair value gaps that get left on the chart. Okay, as you can see here on BitGet, we've got trading view. Okay, so you can see that I was just drawing up. Let me see if I can find the rectangular box again, right? So we just drew in here this little rectangle box, right? And so we know that there was too much selling pressure in this little range here, okay, and not enough buying pressure inside this range here. This basically creates this imbalance, creates these fair value gaps. And when you create these fair value gaps, price likes to go back and fill it out. As we had seen previously, let me draw another one over here. Okay, I'm going to move that out of the way first. So as we can see here, right, it took a while to completely fill it out, but price came down, created that imbalance in the order books, too much selling, not enough buying, and then price gravitated up higher. I'm going to have to move this thing out of the way. There we go. And it moved up higher and completely filled out this box. Okay, so price likes to gravitate towards fair value gaps. It's not a guarantee, but it likes to go back and fill it out. Okay, so let's come back into our charts here. So, knowing that we've completed kind of all the fair value gaps, all the major ones anyway, on the chart here in this overlapping structure, yeah, it doesn't look overly promising. Now let's come over into Elliott Wave theory. Now I'm going to use the Binance data because it has all my technical analysis on there already for Elliott Wave theory, but also it has a lot more data for zooming out on. So over here, for example, we can see that we had our target range. Okay, this is our C wave target range for 26,458 to 26,665. That was the last one I was talking about. What I want to do is I want to just do some cross checks to see if that is still valid. Yeah, that's fine. And as you can see, we kind of got up high, but not quite to the range, right? So we rallied up to 26,433. The minimum that a C wave should have done would have been the A wave. So we met the minimum expectation, that was 26,206, but we failed to reach the typical 1 to 1.236. This is actually okay. It's not too bad. We've rallied, pushed on back down, and I can kind of mark that one off as completed if we wanted to. I'm going to leave it there for now. And the reason that I want to leave it there for now is that we haven't gone down lower than our swing low here, that 25,602. And until we break that low, we can't be 100% confident that the C wave is done. But for the most part, I think it's potentially complete here. The correction is done, and now we can continue in the direction that we were going in previously. Coming back to our charts over this side, zoom out a fraction, so back on the BitGet data here, we can see that we're in the trend direction to the downside with lower lows. Okay, we can see that in there. Okay, and I think I can try to connect it even to that higher range right up there. And we just pull that across. Right, we know that we're in this move to lower lows and lower highs. This will eventually break upwards, and I'm confident in that. It just doesn't look like it's going to happen just yet. We are also in the lower lows as well as those lower highs down here, and so you can see things are coiling up quite nicely into that little range there. Okay, this could be a contracting diagonal over the bigger, maybe. Let me see if I can pull this into view here. So a wave 1, 2, 3, 4 and 5, wave 1, 2, 3, 4 and 5, like this, okay, and get you a contracting diagonal right in towards the end there, but it would be unusual, to say the least, because what we're talking about here is a much bigger potential contracting diagonal. So you kind of have these things nesting inside each other. This is something that I've been talking about for a while. It's kind of complex, but for the most part, it's showing us that we're not done or anything like that. Actually, yeah, something to this effect. I can draw it on there. There we go. And so for the most part, it looks to me like we are going to be getting some kind of relief rally to the upside. Now that could be based on the Fed, might not be, but for the most part it does look like eventually we're going to be getting that break to the upside there. But all the internal structures here are telling us that things are bearish, okay? At least on everything that we've kind of got going on with with our structures at the moment from an Elliott wave theory point of view, and all that kind of stuff. Now when we zoom out and we take a look at our macro view on the daily time frame, well, we found brief support at the moment on the 200 EMA there on the daily, and again, we're higher highs, higher lows. We are looking for that breakdown on the daily chart still for Bitcoin. So for the most part, I think we can go either way. All eyes are going to be on the Fed. If it's a 0.25, we go down. If it's a flat, no change, then we go up. At least a little bit, and then we'll take it from there. I think ultimately we're in a very fragile place, so the bulls and the bears I think are just steadily waiting. Large institutional funds are just sitting and waiting for whatever the Fed rate is, and whatever that decision is, it's going to basically tell us which way we're going to be going in the market. Let me know what your thoughts are down in the comments below. I'm going to leave this video right there. If you found it useful and informative, smash the like button. If you're new, subscribe, and if you haven't joined us in Discord, check it out, linked in the description below. And guys, if you're looking for a new exchange, why not check out 𝗕𝗘𝗪𝗓? Affiliate link in the description below. It is my go-to platform for all trading at the moment. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.